The day I discovered this strategy that I'm about to show to you for free was the day that my struggles in the market ended. Whether you are a beginner trader or an advanced trader, and you know you are finding it difficult to be consistently profitable in the market, you will need to stick with me to the end of this episode, because the simple strategies I'm about to show to you will actually change your trading experience forever. All you need to do is to stick to the rules, simple rules that I'm about to show to you now. Now, this strategy is going to use the daily time frame. You only need a simple, straightforward thing on the daily time frame. And you drop down straight to the 15 minutes or the 5M and then take your entries. I'm going to show you the candle patterns you need to see when you get to your 15M time frame. Let me show you that one first before we actually go to the daily time frame, and then let's start from there. Take a look at this pattern and master them like the back of your palm, because these are the patterns you need to see on your 15M or your 5M before you can pull the trigger. Look at this. You need to find price coming down and then a bullish candle taking out the high and closing above this high. Very, very important. Once you find that, how do you take your trade? Well, you need to mark out this candle, and that is your zone, your entry zone to take trades higher, and you're targeting 1 to 2 minimum. Now the second one is the same. Once you find price coming down and you find this candle taking out the low of the previous candle, this is very, very important. It has to take out the low of the previous candle, just like so. Once it takes out the low of the previous candle, once this candle closes as a bullish candle, you want to take your trade directly at the close of this candle, just like so, and you target 1 to 2. The same thing with this thought diagram, but if you look at this thought diagram, it's slightly different from this one. Why is it? You find price coming down, and then it has to take out the low. This candle has to take out the low of this previous candle. Once it takes out the low of that previous candle, and now you need to wait for this candle to close above. Why? Because this candle closed bearish, so you need to wait for this confirmation candle. Once you find a bullish candle closing above this high, then you can mark this zone as the zone you want to take your trade from, and you will also target 1 to 2. These 3 candle patterns that I've shown to you now, they are reversal candle pattern, very powerful reversal candle patterns. So with that being said, let me take you back to the daily time frame and let me show you what you actually need. Okay, so this is the daily time frame of GBP JPY. You can also check it out on your own chart there. Now let's start from a Monday, because I want to do a back test of this strategy for about 5 days, and then we see how effective or ineffective it is to use this strategy. Now let's start from here. We are starting on Monday, the 17th of November. Now take a look at this candle before the 17th of November. This was on a Friday. This black candle was on a Friday. Look at the way it took out the low of this previous candle. That tells you that the smart money wants to push price higher. Okay, now you want to trade on Monday. Now this is Monday on the 17th of November. This is all you want. You know that on the 17th the market is going bullish. Bullish. Why? Because of this signal here. So once you know that the market is going bullish, all you need to do is to drop down to your 15M. Very simple. So we are going to drop down to 15M now. Okay, so this is the 15M of GBP JPY. Now you see these boxes here? There are London key zone and the New York key zone. You can find this indicator on your trading view. All you need to do is to go to the trading view indicator session and type in ICT session. Any of the sessions will work well for you. So once you plot the indicators, you want to take trades on your 15M or your 5M only within these boxes that you find. Anything outside of these boxes, you are not interested. Now, once price is within this box, you want to look for any of these candle patterns that I showed to you earlier on. Okay? And if you look at it here, you will not find any of those candle patterns except here, where price has swept the low of this previous 15 minutes candle. Okay? After sweeping that low, look at this. Price closed bearish. Once it closed bearish, you need to wait for further confirmation, because it closed bearish. If it closed bullish, you would have entered your trade directly. But now it closed bearish. So you need to wait for this next candle to close above it. Once you find that, how do you take your trade? At the close of this bullish candle, just place your buy order here, give a buffer to your trade, and then target 1 to 2. And as you can see, price hit your 1 to 2 easily. Now, you can actually begin to trail your stops after 1 to 2. How you do that is to take this, your stop loss, to break even. Once you take it to break even, and then you begin to trail your stops, you can trail it to get maximum reward. All right? For example, if you took it there, you find out that price actually went there and hit your TP. That's first example. Now, let me take you back to the daily time frame and show you the second example. Remember, this happened on Monday the 17th. We want to do a back test of 5 days and see how effective or ineffective this strategy is. So we go back to the daily time frame now. Okay, so this is the daily time frame. Remember, we traded on the 17th. So we want to trade on the 18th of November, which is Tuesday. So we now know that we are still bullish on Tuesday. So we want to go back to the 15M and then look for the exact same thing. Okay, so this is Tuesday, 18th of November. This is the kill zone. So we want to look for trades within this kill zone, the candle pattern that I showed to you. Now look at this candle pattern. Price was coming down, and all of a sudden this bullish candle went and took out close above this bearish candle. So what you do is to pick your buy tool, and then you enter your trade immediately after this bullish candle closed. You enter your trade from here, and then your stop loss, give a buffer to your stop loss, and then target 1 to 2. Simple. This is not a difficult thing at all, guys. Don't make it any difficult. This is roughly 1 to 2. And as you can see, price actually got there or not. Price went there, 1 to 2. Can you see that? Simple and straightforward. This is day 2 now. Now let's get to day 3. We know that we are still bullish on the daily time frame. So this is the 19th of November. And as you can see, look at this carefully. Look at this candle, printed bearish. And this next candle, printed bullish, and took out this previous candle slightly. All you need to do is to place your pending order. You must wait for this blue candle to close, and it has to close above the high of this previous 15 minutes candle. And as you can see, that happened there slightly, and therefore just place your pending order right there, and stop loss just below. Give a buffer to your stop loss, and target 1 to 2. So let's look at 1 to 2 here. That's roughly 1 to 2, guys. And as you can see, boom. Now, if you didn't want to use this candle, if you are not convinced enough to use this candle, now let me tell you another candle that you could have used within that zone. Let me show that to you. Look at this. Look at this candle. If you are not convinced that this blue candle closed above this high, but how about this? Look at this. It closed below. I mean, it took out the low of this previous candle. This one. You see that low was taken out, was swept. And after sweeping, it closed with a strong bullish presence. All right. So at the close of this candle, this blue candle, you would enter your trade going long. Simple. But it has to be within this kill zone. But your stop loss must be above this lows here. All right? And you target 1 to 2. Look at this. That's 1 to 2 roughly. And look at what price did. Boom. It hit your target. Simple. This is day 3 now. Now, let's go to the next day. Because we know the next day is going to be bullish. We want to trade only bullish presentation. Anything that is bearish, we don't want to trade. Why? Because we already know from the daily time frame that we are bullish. So now, here is another one. Look at this. This candle printed a low, and this next candle close above it. Pick your long tool, enter at the close of this bullish candle. Once it closes, you place your pending order right here to go long, and your stop loss just below. Give a buffer to your stop loss and target 1 to 2. 1 to 2. And as you can see, price hit it easily. After 1 to 2, you can begin to trail your stops, just like I told you in the first scenario. If you want to start trailing your stops, once it gives you 1 to 2 and closes above, you can move your stop loss to break even, so that if price comes back and take you out, you don't lose anything. Okay? So once you take your stop loss to break even, then you can start extending to get maximum profit. So this is day 4. All the 4 days we have won. Now let's look at the last day that we want to do this back testing on. So this is the last day. This is on Friday. We are still bullish. We want to go bullish. We don't want to sell. We want to go bullish. If you are enjoying this video, please give us a like so that the YouTube algorithm will show this video to more traders who actually want to be consistently profitable in the market. And if this is your first time seeing our YouTube channel, please hit the subscribe button and become part of the family, and turn on the notification so that anytime we publish a new video, you'll be notified about it. And if you haven't joined our free Telegram channel, please do so just immediately. Now, so there was no opportunity during the London key zone to go long. So now on the New York key zone, is there any opportunity open for us to enter the trade? No, there is no opportunity open. Why? Because these are all inside bars. Between these candles high and low, look at this, guys. These candles high and low. So all these candles are inside of this. So there is no signal for us to enter the market here. There was no signal here. There is no signal here. So you stay out of the market. So you don't take any losses. Okay? So that's how we do this thing. Simple and straightforward. Just go back and back test. You don't need to rush down to the comment section to begin to abuse me or insult me. You need to go back test it first of all and see how it works. Follow the rules. And if you are new to our channel, please consider subscribing and turn on the notification so that anytime we publish a new video, you'll be notified about it.